Okay, hello and welcome to our weekly webinars. I'm telling weekly because every Friday we're going to have these webinars. Make sure that you're following all the registration links and get involved in all of them. Today, our sponsor is YWO Broker, amazing broker. You can test it with amazing products, low spreads, and fast market executions. That's something that probably all traders looking for. Okay, today's webinar's subject is about the NFP numbers, US labor market job. In less than 30 minutes, we're going to have the final number for the NFP. That's why before that, I'm starting before that because we want to check the numbers, the data, and then we can go forward and get prepared for the NFP numbers and see how we can trade during the NFP and after NFP number after that NFP number is published. What's very important to learn and to know is that US job market numbers in the NFP week, it's not about just the NFP numbers. During the week, generally, we have several numbers that all of them are very important. And together, when you're putting those numbers together, then you will have the final data and final numbers, and you can then go forward and just make a decision based on that. When there is an NFP week, I mean, usually the NFP is publishing or non-farm payrolls numbers publishing on Friday, every first Friday of the month. Since the last Friday was the very first day of the month, in these conditions, usually the numbers are getting to the second, I mean, to the first complete week that we have in the month. Anyhow, so when you have a Friday that you have to get the NFP numbers during that week, starting from Tuesday, usually we have several other numbers, and that's the series of numbers that you have to put them together and then come to this conclusion to see the final NFP numbers. Before NFP, let's see what we had on Tuesday. Tuesday, we had GLT's job opening for the March. What does it mean? Yeah, don't forget that GLTs, like uh, they are just like with the 1 month lag is publishing. For example, today we will have the NFP numbers for April, but GLTs they are for the March. That's how the system works. GLT numbers showed us more than 6,800,066 opportunities or the job opportunities, the vacancies that we had during the March that are not or have not been fulfilled. I mean, we had in the US market those number of the create jobs that have been created, but at the end of the March, no one could take them or no one didn't want to take them. But we had these opportunities in the market and more than 6,800,000 jobs have been shared by the different companies. Just like it could be private sector, it could be government sector, or any small or big companies across the United States. Looking at this number, we can understand that month before that, in February, we had 6,922,000, and we were expecting to see market was expecting to see 6,860,000, but we had 6,000 more than expectations. Looking at this number and checking the graph, let's say if we look at this number, we see that what we had historically for this number. Historical looking, I mean, if you go like in the now, if you go just like for 1 year before, you could see these numbers at the very high levels, around more than 10 million, almost sometimes almost 11 millions, like a year ago. This was it's March last year, and this is oh, sorry, just like it's March 2022, and then this is after COVID was off, just like after the COVID, we had these numbers of opportunities, and when we didn't have many jobs during the COVID, then slowly, these numbers started to go down towards its historical numbers. Historically, we have these numbers around like 5 million and 6 million. So if you compare these levels with the historical levels, you can see still we are in a high level. So 6 million, even though it's less than previous month, we can say, okay, the US job market still is very strong compared with even the pre-pandemic in 2019. You can see here during 2020, during the pandemic, we had these numbers at the low level around less than 5 millions, but again, the numbers started to go up and then falling down. So if you're looking at the historical numbers, you can see still it is very better, much better than compared with the historical numbers and compared with the pre-pandemic. But during the last year, you can see, okay, these numbers was just like GLPs, just like if you look at the numbers, you can see that was somehow stable, and still these after February that we had 6,500,000. The next month we have higher levels, and still the that continues. So comparing with the historical levels, we can say GLTs is not bad. The GLTs we have a very we have that acceptable level. So that means the U.S. job market. Looking at the GLT, we can say that the U.S. job market is still strong and fine. Then next number that we had came on yesterday, on Thursday, that we could check about the US job market. That's also very important to look. As we go down, uh, this is job costs that usually we have during this NFP numbers. Like this initial claims on jobs, generally claims for unemployment benefits, is something that we have every Thursday. We will talk about that as well. But now I want to talk about the this like unit labor cost, and also this number here. Oh, here we go. This is Challenger job cuts. The Challenger job cuts, which is for April, the period and duration that we're gonna have the NFP numbers as well. What this number telling us? What's the Challenger job cuts? Challenger job cuts are the numbers that companies they are publishing as the number of the jobs that the number of the laborers and the job market. I mean the employees that they cut from their market, or they cut from the company, or they cut. I mean the numbers that they just fired someone. Anyhow, that shows the number of the labor that have been caught or excluded from the job market, from the labor market. So you can see here, comparing with the year ago, it is almost 21% lower. It's almost 21% lower. And last month also, it was 78% lower. So looking at the historical, if we look at the historical number, we can check that as well. Before checking historical number, I have to tell that Challenger job cuts in April was only 83,387. Compared with these opportunities that we had, GLTs was with 6,866,000 opportunities or vacancies that we had, but the cuts only 83,000. So again, that can confirm that current labor market is still strong. So looking at that, let's go and check the historical numbers. Historical numbers, that's you can see here around like 671,000. It's the May 2020 when we had a COVID at this highest level affecting the labor market. But before and after that, this number was around, you can see here, before the pandemic, we had that around 41,000, 40,000, 36,000, 50,000, 53,000. And after that, just like slightly increased around all after pandemic, that when the job market became slightly normal, we had usually that around 70, around 40 and 60,000. So not big, not low. In recent months, we had some changes in the counting of that. That's why we had 1 month here very big. It's around 275,000 in April 2025, just last year, the same month last year. But the reason was the changes that we had in the U.S. labor market had in number of the counting in the system. That's why you could see here a very big number, but generally the number you can see, the cuts, they are around 70, 80, 48, 70, 80, those numbers. And that also shows that the cuts are slightly comparing with the pre-pandemic cuts, the job cuts are slightly higher than pre-pandemic, but still looking at the historical number, we don't have that in a very big levels. So looking at the year, comparing this is the in a past year, in the last year, we had January the lowest at 71,000, but all others they were bad. Oh, sorry, 35,000, but all others they were slightly higher, and now we can see here. But if you look at the trend in the last 3 months, in March you had that around 48,000. In April you had 60,000, and in May, which is published yesterday for April, it's around 83,000. So this April number 83,000. You had that for the March number, it's about 60,000, and then you have for the February 48,000. So that shows that in the past 3 months, slightly the job cuts getting higher. So the job cuts number is getting higher. So we have more cuts. What does it mean? It means that the job market is giving us some signal that while it is strong, you have to be careful. While it is strong, you have to be careful. That's what the job cuts telling us. So the next number that for the job market is very important to watch is initial claims and continuing claims, generally the claims to get unemployment benefit. What means initial claims, initial jobless claims? It means the numbers of the people that for the first time, not for the first time in their life, for the first time, I mean, before if they were working the previous week, but last week they got unemployed and now they're claiming for to receive the unemployment benefits. That's about 200,000. 200,000, looking at the history, if you look at the historical levels, you can see that this pre-pandemic, it was just, if we go to, let's say, it's like, go to the maximum to see the historical levels. Look, the historical levels are about 214, 250, 230, this pre-pandemic. Yeah, during the pandemic, it was very high. Then again, 240, 190, 140, 240, 240, 211. You can see generally we are in a historical level. I mean, we are the job market got to the pre-pandemic level, and we can say, okay, the job market, the number of the people that they are claiming to receive the unemployment benefit is around the historical levels. That and very, if you look at just like past 1 year, you can see that the trend is slightly lower. I mean, the number of the people that they are claiming to receive the unemployment benefits, it's getting lower. What does it mean? It means that the job market is strong. So job market is strong. GEOLT is also saying that. Initial claims also saying that. But let's say let's check the continuing jobless claims. What means continuing jobless claims? Continuing jobless claims means the number of the people that they have been applying to receive the unemployment benefits for more than a week. I mean that they have their second or the third week or the fourth week that they are trying to receive the unemployment benefit. When you see this number is increasing, it means that when you are getting unemployed, before finding a new job, you have a longer period. You need longer time. You need a longer period to find your next job. When you have this number in the lower levels, it means that you can find. I mean, your chance to find a job after you got unemployed is getting higher. So you can find a job much faster after you got unemployed. That means just like that's the meaning, and that's how we can understand the unemployment rate. I mean, the continuing jobless claims to receive the unemployment benefits. That's the exact meaning of continuing jobless claims. So this number for the claiming the unemployment benefits, it has the third number as well, which is 4-week average, which means in the past 4 weeks, usually what was the number in the past 4 weeks? We had 203,250 claims to receive the unemployment benefit for the initial claims. That means generally looking at this number, you can say the number is very low. Even the continuing claims also under 1,766,000. That is one of the lowest numbers that we had during the year ago. And the claims for the 4 weeks, average for the 4 weeks also is very low. That's generally putting together, telling us that the U.S. job market is still strong and just like in acceptable levels. Uh, the next number that we have and we have to watch is today's number. Today we're going to have the NFP number, the non-farm payroll, the number of the jobs that have been created, which we're going to have in 13 minutes. Now we're going to check the market as well. The number of the jobs that have been created in April for in the cities. Usually we can say that for people that are living in the cities and not farm jobs. So that's the not farm jobs, not the NFP numbers. So what market expecting? Last month for March we had 178,000 newly created job, and now we're expecting to see 65,000 for overall. For private sector, we are expecting to see 75,000 newly created job, and in government sector, we are expecting to see the government sector. There is no expectation, but probably it's going to be around 10,000. Oh, sorry, it's for April. It's going to be probably more because we had a war, and during the war, usually the government hiring more. So because army is the government job. So average weekly hours of the working, expecting to see around 34 hour and 20 minutes. That's something that we are expecting to see to be continued. But one of the other parts in the NFP numbers is to check this one, average earnings. Average earnings per hour monthly, usually in historically, it is around 0.3, 0.4%. And annually, it's between 3.8 and 4%. So when you have this number, it means that the people making normal money. For example, earlier today, let me give that example from the Japanese market. Earlier today, we had average income in Japan that fell from 3.4% to 2.7% for the March. What does it mean? It means that the people, they are making less money. I mean, it doesn't mean that their income is getting slower. It means the speed or the piece of their income, the piece of increasing is slower. Okay, so which means that they will make less money, and when you're making less money, you're spending also the less. So you're making less, you're spending less, GDP is lower, your demand is lower, that can bring down the inflation. So when you have demand, lower demand, less expectations to spend the money. So you have lower demand, lower spending, less spending, and when you have the less spending, you have lower inflation as well. That's the meaning of uh, average income on the monthly basis. So, but for the US, this number is around 0.3, 0.4% as a historical number, and that's what we are expecting to see as a 0.3% for the monthly growth here as well. Checking the market before that, US dollar index trading around, looking here, US dollar index trading around 97.66. So that says that if we look at the 1 hour chart, checking the today's and yesterday's and today's changes, it means that you can see here, dollar index fell to, guess, you can see here the dollar index in the last 24 hours. If we look at here, today is 8-7. So in the last 24 hours, you can see dollar index is slightly higher. First lower at the beginning of the week and then higher. At the beginning of the week, why US dollar index fall or slower? It's because that on the geopolitical side, we had this news that the US and Iranians, they are getting closer to have a deal that's made the geopolitical tensions lower, And when you have the geopolitical tensions lower, you have less demand for the safe haven, as the US dollar index, US dollar is playing as a safe, one of the most important safe haven right now. So the demand get lower. That's why you could see the dollar index down from 98.3 to down towards 97.3.4. That was what happened. And then slightly got started to increasing higher. And now you can see here before NFP, now the market is just like for its expectation. Now the market is around 97.67. That's the job market. That's the US dollar index. If you have the stronger NFP numbers, that can increase higher. And if you have the weaker NFP numbers, that can fall further. Looking at the other markets, let's check the Euro USD. Euro USD is trading around let me go to 1 hour chart, right? That's the 1 hour chart. And you can see here the news that they're affecting the market, the Federal Reserve government speech we had. In the Eurozone, we had speech again. So now we have this, that market are waiting for uh, these numbers, average weekly hours. You can see here those numbers, participant rate, non-farm payrolls, and those are the news that we are waiting to publish. And if they publish, we can see we have more than 9 news here, right? So when the 9 numbers that have been that we are expecting to be published, and when we have these numbers, we will understand it. If we see the stronger US dollar, that means that the Sierra USD should be down, and if you have the weaker US dollar, that can increase higher. I do personally expect to see the dollar index stronger and the NFP numbers stronger, because looking at the weekly numbers, you can say, okay, in the weekly numbers, we had an amazing, strong US job market, and that can bring the idea that probably we will have the dollar, I mean, the NFP numbers also in a better situation, in a better numbers, in a better levels. That's why that can increase the dollar index as well. GDP, uh, if you look at the GBP USD, same here, same as the Euro USD, the number situation is the same, and the market is, you can see here, the cautiously moving forward and waiting for the NFP numbers today, while the dollar index got slightly weaker here, you can see. As the dollar index got slightly weaker, GBP USD, and it's same as the Euro USD, they got slightly stronger. Checking auto market, let's check the stock markets. Let's check the gold, and then we can go to the stock market. So gold is counting. You can see here the gold is slightly lowering. The main reason is because that the gold also counting, the gold market also counting on slightly stronger US dollar. And when you have the slightly stronger US dollar, you can see this number can fall further. And now you can see that 4,000 $705. Earlier today, we could have it around 4,770, 780. That was the area that we had. And now, with the expectations of the stronger dollar index and stronger NFP numbers, that's falling. When you have the gold, this you can see here XAU USD. It means that when you have a stronger US dollar, the gold can be in a weaker position, and when you have against dollar index, and when you have this weaker dollar index, you can see the gold in a stronger position. And so that's directly depend on the directly depend on the US dollar value. Looking at the stock market, S&P 500, that's the Dow Jones chart, right? Yeah, that's the Dow Jones chart. You can see Dow Jones. After last night fall, the Dow Jones again started to increasing. The last night it was, I mean, the market was down. And generally, the stock market, Dow Jones, S&P 500, and the Nasdaq, all of them, they were strong in the recent days, and we know that even the last night they had, I mean, yesterday, during the yesterday trading hours, all of them, S&P 500, Nasdaq, and S&P 500, Nasdaq, and Dow Jones, all of them, they printed uh, new all-time high. But right after that, we had a news that there was higher, slightly conflict started between in the Persian Gulf, started the conflict between Iranian and American. So they shoot at each other. That increasing this Middle East tensions when increased between Iranian and American. that increase the market tensions. And when you have the tensions higher, you could see here that the market is counting on just like more risk. And when you have a more risk in the market, that can affect negatively the stock market. That was the reason of the last night fall. But generally, you can see the trend is positive. The main reason it was because of earnings reports that we had in recent weeks. We had amazing earnings, the positive numbers, and those positive numbers increased the market. Other number that we have to check is the FedWatch tool. The FedWatch tools is the expectations. This is a tool that CME Group is publishing, and that still shows us the expectations that what's the expectation of for the rate cut or the rate hike for the next Federal Reserve meeting. And you can see here that for the next meeting, which is going to be in July, in June 17. In May, we don't have the meeting. In June 17, we're going to have the meeting. And now market counting more than 96%, almost 97% of holding the current rate. For the July, also is the same, more than 90%. For September, again 89%, against 10% for the rate cuts. In October, there is a you can see here there is even the 10% chance of the rate hike almost, and again 81% for the holding the current rate. And for December, again there is a 73% chance of holding the rates. So always we have more than 7%, 70% of the chance for the holding the current rate. That's when you have the stronger dollar, when you have a stronger expectations of uh, when you have, I mean, that's depend. I mean, mostly depend on the inflation and the labor market. When you have a strong labor market, the expectation for the rate cut is slowing down. At the same time, when you have higher inflation or expectations for inflation, that can put that can push the Federal Reserve or support the Federal Reserve at this better to say to hold the current rate as without that the main uh, goal of the central banks, especially for the Federal Reserve, we are talking is to control the inflation and labor market, to bring the labor market to its best condition and to control the inflation, not control the prices, actually, you can say, to control the prices and inflation. That's the mandate that the Federal Reserve has. And when you have a strong labor market or when you have the higher inflation numbers, so it means that the Federal Reserve or central banks usually supposed to hold their current rates or they increase the rates. That's the expectations before the numbers down. So for now, the market counting on what market believes when you can see here the expectation of holding the current rates, it means that the market believes that the U.S. labor market is strong, inflation is high or expectations is high. That's why they have no reason to cut the rates or to change to make any changes in a policy, in a monetary policy that they have. That's the market condition and the situation before numbers out. And now we have the numbers. Let's go and check the numbers. Before we check the effect of the numbers, let's check the numbers itself. We can read the numbers and then we can go forward and see how these numbers can affect the market. Okay, amazing number we had. Okay, unemployment rate unchanged at 4.3%. That's one of the most important numbers that we have to watch. 4.3%. Okay, that's very good. Newly created job, 115,000, like almost twice more than expectation. That's amazing. That's wonderful. I mean, number of the jobs that have been created is very high, and that's amazing here. 115,000. It's a high value. It's a high number of the newly created jobs. And in the private sector, also almost the same. 123,000 newly created jobs. Amazing. Participant rate is slightly lower from 61.9% is down to 61.8%. And U6 unemployment rate is up 8.2% from previous 8%. It's slightly a slight like wider range of checking the unemployment rate. And then we have here the government created job 8,000 lower. So that was I was wrong. I was expecting to see higher number, but we can see here that the government didn't hire new jobs and didn't hire the new employees. Manufacturing payrolls, the jobs in the manufacturing sector also slightly eased, minus 2,000, while average weekly hours also increased to 34.3. But let's see the average earnings. The average earnings lowered to 3.6%, missed the expectations, less than previous months, and on the monthly base also it increased only 0.2%. So reading these numbers, what these numbers telling us? It tells that job market by the number of the jobs and hiring is amazing, good. Unemployment rate didn't change. More jobs created, but at the and now these people they have a more time also to work. Just like average working hours is 34 hours and 34 hours and 30 minutes, but they are making less money at 0.2% average increase, annually 3.6%. That means what that means. Looking at these numbers maybe can tell us comparing why I'm telling you should compare these numbers with the previous numbers that we had. When you have less uh, job cuts, okay, when you have a less people that you fired, less fired, it means that the companies they are trying to hold their value employees. So, and then you can see there is a less cuts, and the company, it means that the companies usually they cut someone that they don't need them necessary. They are not like professional employees. They are in the middle or lower the middle level of the employees, and then you can hire them back, which is you're hiring them. It means that their salaries usually lower than middle or the less than honors. That's why the number of this number or the average of payments also low. When you have hirings higher, but the average income is not high, again, it tells exactly that you have it is that you have more employees, you have more hiring, that they are with the lower payments. So you have more numbers, you have more people that are hired, but you are paying them less. So the situation is clear. You are hiring with the less uh, payments, okay, with the less lower number of the salaries. So that means that demand should not increase that much. So when you have a less increasing in average payments, it means that the situation, or it means that the inflation expectation or higher prices, it's lower. So you have the situation, you have this condition, the condition and overall situation is positive for inflation expectation. So it means that inflation expectation is low. So that's the reading of these numbers. And now let's go and check the market reaction. Let's check the Fed Watch tools, the changing of the, we shouldn't see any big changes here, but let's check the US dollar index. So the US dollar index is slightly lowering. Don't forget, initial reaction right after the news is not always the good reaction. It's not always the correct reaction. You can see here, let's first check the reaction and then we can go forward and check the detail of the reaction and the further expectation. So now the initial reaction. Dollar index is lowering. Looking at the other markets, this is the S&P 500. S&P 500 is increasing right after the news. Same situation most probably we should have for the Nasdaq, right? The Nasdaq also is increasing. Same situation we should have for the Dow Jones as well. The Dow Jones also is increasing. Good. This is the same reactions. Checking at the euro, gold. Let's check the gold. The gold also should increase, right? The gold also increasing because weaker US dollar will make uh, the gold more valuable against the dollar index. Same situation, we should have the uptrend. We should have in the Euro USD. Oh, no, the Euro USD is down. Look at here. That's the first. That's what I was talking about. Okay, let's check the GBP USD. GBP USD is up. Okay, GBP USD is up. Euro USD. Euro USD. Where's the Euro USD? GBP USD is up, but Euro USD. Yep, sorry. Euro USD also first down and now again up. So Euro USD is up. GBP USD is up. Let's look at Victoria minutes. GBP USD is up. All against every symbols against US dollar index is up. Why? Because the dollar index is lowering. But should that numbers put the pressure on the dollar index? What do you think? These numbers should put the pressure on the dollar index. Looking at this number, what can we understand? Let's review to understand to have the better guess on the next market movements. Let's check these numbers once again. Average income slower, which means we have less concern about the inflation. Okay, making a decision for the Federal Reserve. Federal Reserve decided. Look at here. Look at here. This it was 2.1. Now it's 2.9. 97.1. It was 96.9. Right. So I will tell you exactly now what's happened here. Looking at this number, it's telling that we should have less, the Federal Reserve how the Federal Reserve making a decision. The Federal Reserve's make decision comes from two uh, directions. Labor market, inflation. Labor market is strong. Labor market is strong. Inflation is high. Generally, right now, inflation in the United States more than 3%, but the concerns that comes from labor market is down, but inflation right now is not high because of the labor market. Inflation right now is high because of the energy market prices, which means that's not something that can affect the energy market inflation right now. Decisions for the inflation right now, that should not be very important. The most important right now is the energy market. So let's check the energy market. Energy market is WTI. WTI is still $95 and it's still high. So energy market is still high. Geopolitical tensions is still high. So we cannot count on the lower inflation or lower energy prices, at least with the current market condition. So energy market is high. Which is moving the inflation right now. And labor market is still strong. 123,000 newly created jobs in the private sector. 115,000 generally in the overall labor market newly created jobs. That's an amazing number. That's an amazing number. Which means labor market is still strong. Looking at as we reviewed the GLTs, as we reviewed the claims for the to receive the unemployment benefits, looking all these numbers, reviewing all these numbers, telling us that right now the labor market is still strong. So the labor market is still strong. We have a strong labor market. And also we have happened here. I'm sorry. Yeah, we have the labor market is very strong. So the labor market is strong. We have very amazing labor market. There is no doubt on that. At the same time, we have the inflation also is high. So the Federal Reserves the Federal Reserve members, they do not have any reason right now to decide about the rates cut. So when you have the rates higher in a higher level, which right now we have, and the expectations is high for the holding the current rate, it means higher for longer. Higher for longer for the holding the current such a rate like 3.50 and 3.75% is a high inflation labor is a high uh, rates, interest rates for the central bank. That means higher bond deals. When you have the higher bond deals, when you have the higher inflation, we don't talk about the bond deals. It's this. Let's talk about the bond deals. This is bond market. The bond market, 10 US 10 years bond market is 4.37, almost 38. That's high. That's very high. So what does it mean? It means that the bonds market is high, yields are high, US labor inflation also is expectation still high, labor market is high. So higher for longer. That's what we can see here. So now how that can affect the market, which that means the US dollar index should be stronger. So if you can see here, the dollar index is lower. It's the fake reaction, fake initial reactions here. Make sure that you follow the gain the market. Generally, what I'm telling the traders, about an hour after NFP is out, don't make any decision. Wait for about an hour to understand what exactly market wanted reaction, because the numbers are coming out right before the US market opens. So we have to wait slightly that the US market opens in like about 20 minutes. When the US market is opening, then we will have the real reaction. So this number will telling us higher for longer. That means US dollar index. My expectation for the dollar index is still strong. So I do expect the dollar index to come again above this trend level. So now I'm still a positive, or at least I can say I am with these numbers. I can say that I'm still uh, natural with the positive expectations. So the dollar index around above around 98. I want to see that the dollar index around this area. That means if you see here, so which means that you have to see some pressure on Euro USD. Where's our Euro USD? You have to see some pressure on the Euro USD. Even if the Euro USD is increasing right now, it doesn't mean that it can go further unless if we can see this trend line. Look at this trend line here. Unless if we see holding this almost, or better to say not even this. Here is the best market. If the price moves higher above that, which means something like 1.1785. If the Euro USD moves above this level, the trend can go further. But as long as it's under this trend line and as long as it's under 1.785, it's a sell opportunity. Same we can say for GBP USD. GBP USD also has exactly same condition, which means now is around these levels, and the short-term period, short-term period trend line is around these levels, almost this. Which you can see here, the trend line is broken, and unless if it cannot come back above the trend line, above this level, we cannot count on a further uptrend. So any high here can be the sell opportunity. Same for the gold. Actually, the gold is slightly tricky because it's the safe haven at the same time, and the demand for the safe haven demand also can affect the market. So for the gold, we should be slightly more cautious about what happens. But generally, what we can see in the market that uh, gold is a side movement, mostly natural. Let's talk about the gold as a natural. But about the stock market you could see here. Now check it here. Look, the initial reaction was up, but now with this number, I do expect to see this is slightly this red candles to slightly start it and go further lower. Same situation I do expect for Nasdaq. Go to the 15 minutes chart. Go to S&P 500 to 15 minutes chart. Go to the dollar index to just like a 15 minutes chart. Let's make it a 15 minutes chart. You can see here. Look, that's the reaction that I do expect to see. So generally, looking at this number to understand what means what's happened here, I will repeat once again that U.S. job market with these numbers, starting with the Tuesday number, better start with the Tuesday number to understand what's happened. If you want to understand what's happening in the stock market, to understand the NFP numbers, you have to start with GLTs. GLTs usually publishing on every Tuesday. the week of the Tuesday, that Tuesday, that the later we're gonna have on it's Friday, we're gonna have the NFP numbers. Here we have the GLTs. You can see the GLTs is positive, better than expectations. We check the historical levels, is around the historical levels. So GLT says that the US labor market is strong. And then on Thursday, we had job cuts. We checked the job cuts on a Thursday, and we saw that the U.S. Companies, government or the private sector, doesn't matter. They have less cuts, about 21% compared with a year ago, and generally only 83,000, almost 400 jobs have been cut, while we had more than 6,886,000 vacancies. And then we had jobless claims. We saw that initial claims around 200,000, very low level, around the pre-pandemic level. The same situation we have for the continuing claims and for week average. And now here today we have more than 115,000 newly created job overall, and 123,000 created job in the private sector. And generally, unemployment rate also unchanged at 4.3%. These numbers say that the U.S. labor market is strong. That's why we can expect the dollar index to gain further. We can expect the Euro USD stock market to be Euro USD, GBP USD, and the stock market to be under pressure. That's what's happening in the market and what we're expecting to see later. And that's the NFP numbers and how we should read the NFP numbers. You can come here and check the numbers also here. That's how you should read the NFP numbers. That's how you can just like expect to see expectations. If you have any question, let me know. I'm here to have your question. Anyone have a question? If you have raised hand down, you can just raise your hands. Okay. If you don't have a question, so we're going to conclude this webinar. Hope it was useful for you, and talk to you soon in the next webinars. Have a good day. Bye-bye.